TradeTheNBI.com. This is John's report. Is for the 11th of October. Well, no surprise with what we saw. A little bit of back and forth, but mostly down. There was a bit of a recovery, coming off the news from Germany that, in fact, they were not going to participate in some special joint U.S. bond release. But at the end of the day, Europe's problems are only going to amplify. And the question will become, how bad does it get for the U.S.? I mean, you're already seeing pension funds in that with huge carryover losses on a lot of their portfolios. When they shifted from bonds, they went into commercial real estate. That hasn't panned out well. In fact, I think someone said as much as a 20% of that portfolio is underwater as well. So they're looking at some serious losses for pension funds and things like that. How long before that gets into a crisis mode, we'll see. But MBI quite took the lead, and we know that suggests a move towards the 0%. So that is the expectation. Continued rise for Orange, DOC with the cyan leading. So shorts rising into this, short-term buyers and the steel here falling. All the indicators are that you just have weakness. There was no shock. We were expecting this when we had the red leading all the way through, and we got to the 23%. Bit over that. The question was whether or not they could sustain the move towards the 38 and actually get that crossover of the green here. And when that didn't happen, it was for certain that we were headed right where we are. No shock. There's just a lot of questions as to when and if a credit crisis starts. The Fed is not back down yet, but will they get into a liquidity issue where they have to start supporting some financial institutions? Because in Europe it's already becoming evident that cross-party trade in that is just collapsing. I mean, the Credit Suisse situation and what you're seeing with corporate bonds and stuff, it's really starting to have an effect. NQ did hit the 0%, so it satisfied that one, came off those lows, but did make a new brief low there, all consistent with the expectation. And market got some nice support around that 3,600 range, but it wasn't able to sustain it. The euro caught a little bit of a bid coming back off that news, but again, you're in a situation where what's the ECB going to do? The best bet is for oil to drop. That would be the salvation, and or some kind of true ceasefire and end of sanctions would solve most of these issues. But um, nobody sees that going in a positive direction. Um, this one was obvious from way back at 150 TLT. Treasuries, the expectation that we would break this 100 was evident just from listening to the Fed. I mean, it wasn't brain surgery or anything. There wasn't a gutsy call in any way, shape, or form. It was just basically the unwillingness of people to see the realities that were taking place because they've only known easy money for forever, and well, at least for 10 years. That's changed, and it's having real impact. And like I was talking about in the other video with the warnings from FedEx and AMD, those are going to spread, and how quickly things stall is really going to become the question mark. And whether or not that will be an impact on employment. But those things all come later. We saw these signs early because we were able to see it developing, and the impetus of it, literally was the start of oil. Um, Gold should continue its rise, but when the market is under stress, you get some liquidations within that. And then, of course, there's this counterparty thought of, well, you're going to get into a deflationary cycle with all the inventories, and there's going to have to be liquidations of that when there aren't enough buyers. You can see the U.S. consumers tapped out, maxing out credit card debt, reaching epic levels, and now at higher rates, it's not going to be so simple to maintain. The question we'll start to see it. You'll start to see auto leases, things like that, fading off because they'll become too expensive for most. And how many, the glut of cars that will start to build will be an interesting one. And that'll be an early tell on that when we start to see how that develops. Oil pulled back just a little bit, still over the 90 a barrel handle on that situation, and in a little bit of a soft spot at this particular stage. But again, once you get to these levels, if they're sustained for any period of time, that impact is going to be felt. No way around it. And that's going to push up inflation numbers for, well, probably not the September numbers, but certainly going to have an impact for October. Since now we've gone from measuring in broader terms inflation to month by month comparison. Crazy. If you just don't like the numbers, you just change how you look at them. Is the way the approach has been. It's not new. Every political regime does the same thing as they get into these messes, and that's why they've massaged numbers so much that a lot of it becomes incomprehensible. The thing is, with so much data that we have these days, you can get real time info on what's happening. Um, some people are surprised that Bitcoin and these other cryptos haven't taken off given the fiat currency issues. I would argue that they've performed quite well given the market drawdowns during this whole period. Bitcoin in particular here sustained above this 18 plus handle, and I think that's a good indicator that there's strong demand that's still holding that in place. ETH also uh, reasonably well. I mean, fine, we're well off where the highs were, but some could argue that those were just a little bit out of range, and mostly because of the free money setup that was driving that. Same with market asset prices and everything else, real estate, you name it. From a 50K standpoint, you see the little bump and eased off back there. It was quite an implosion towards the latter part of the day here with the MBI white. It was leading pretty strong and just kind of collapsed. Now, you don't have magenta move back up, so certainly it isn't moved within a buy configuration. It just lost its momentum to the downside. So it was just more of a balance between buyers and sellers. So the 5K ended right back soft off the lows, but back in the middle range, you can see it was that nice runway. Some beautiful, again, this was exactly what I've been saying to expect for this month starting up was these significant ranges, the bursts that, really try to force shorts out. Obviously, this was kind of, a softer day given that, a lot of people were on holiday for Columbus Day, for those few people who get that day, or I don't know if they've some changed it, I think, to Indigenous people as well. So we can give everyone their shout out for all the different names they want to call it. But bonds were, not traded on that. And so it certainly created a softer liquidity issue. But nonetheless, these readings were all excellent throughout the day. It was just easy. We had a lot of MBI white leads on it too, which just indicated that there was softness. And then right here, as the MBI white took the lead, that magenta never moved back below yellow. And once it turned around, you ended up with green move. That was right in this place here. It actually even started a brief turnover right there. It's hard to see with the blend like that, but the paint bar picks it up. It goes off the numbers, and that led to that nice end of day move, which partially fell back because again it was on positive extremes, and those positive extremes go right back to here, which, as you can see, is right over here where we ended and are in post market. So I would say it's easy overall. Everything macro that we've been looking for is taking place. And as the real data comes through, that just confirms what we were able to see all along. It's just shocking the number of economists and that who really couldn't see that what was happening. This was rather obvious. But then again, the same thing happened in '08 when even then I was talking about the situation that was building then, and it was ignored. Now there's a lot more people who are aware of it, and certainly more reactive. But some of them are a lot more parabolic in their talk. Everyone thinks that the world is ending, and you can go throughout history, and everybody's always got that group that says that it's all over. in the real world, people still are going to need to go to jobs, do things. Products need to be produced. So no, unless we get into the Armageddon situation and further escalation with Russia and that, then well, then all bets are off. But in that case, it won't make any difference what the market's doing because it won't matter for anyone. So eliminate those extremes and let's deal with the real world. And the real world is giving us some beautiful trades to take advantage of, and no reason not to. So that's the long and the short of it. As always, though, trade well. Look for me on the Skype chat if anything relevant pops up. I think this was pretty straightforward. Uh, I will be there to let you know. Trade well.